The US household wealth is seeing an astonishing climb to $156 trillion, supported by the surge of stock market and resilient real estate values. Parallelly, we can see the gold is making all-time high. Currently, it's around $2,186 per ounce. The reason behind the gold market move is one, we have Federal Reserve lowering interest rate, causing the dollar to devalue, which boosts the foreign buyers. And secondly, China is buying a lot of gold. The gold reserve of China, as shown here, has been climbing since late 2022. So that's giving a lot of support to the gold price. This is a chart of the gold export from Switzerland to mainland China and Hong Kong. As we can see, in January 2024, there's a noticeable spike in the export. It's 122,000 kilograms in January. So besides the gold, our main topic of the day is Bitcoin. Following the approval of 11 Bitcoin ETFs in January 2024, Bitcoin has been making tons of returns for its investors. It's currently at around $70,000 per coin. Bitcoin in February made a huge move, as we can see the slope of this thing here, and in February the return is one of its strongest return in the Bitcoin history. This is a monthly return chart of Bitcoin. The beautiful performance of Bitcoin has sparked a lot of FOMO sentiment around it. According to Tom Lee, a Bitcoin bull, it still have a lot of room to run higher. So a few years back in 2021, Tom Lee projected Bitcoin would hit 100K per coin, which did not happen. But despite the setback, his optimistic remains unshaken. In January 2024, he made another prediction. He's now saying the Bitcoin price would be 100K to 150K in 12 months and 500K within 5 years. The confidence comes from the factors such as Bitcoin's limited supply, which is capped at 21 million coins, and increased institutional interest due to the Bitcoin ETF approval, and further market acceptance towards cryptocurrency and blockchain, and also factors such as inflation and decreasing trust in traditional financial systems. If what Tom Lee said is true, there is for sure a lot of money to be made, but I think for retail investors currently we're in a very tempting environment, and it's very important to stay calm. I like what Peter Lynch have said about investing. He said, invest in what you know. So in 1980s, when Peter Lynch invested in Dunkin' Donuts because he was impressed by their coffee quality and was simply in love of their product. So, and also as a personal example, I decided to invest in Microsoft, which has given me a lot of return. I made that decision on top of my already existing exposure of Microsoft through my other ETF investments. So the reason why I decided to buy Microsoft is driven by the impact I felt through their AI product through OpenAI, like ChatGPT. It's making a difference in my personal life and in the lives of people around me. And I also believe it's going to make a long-lasting impact. So all these reasoning increased the conviction I had towards Microsoft. I think having conviction in the stuff you invest in is very important because it helps you to get by the turbulence in the future. Besides buying stuff you have conviction in, let's look at ETF safety. So there is 11 Bitcoin ETF that was approved in January. There's a lot of money going into there. Majority of them come from retail investors. So I think the retail investors should really value the ETF safety, because I can give you an example of what happened in Canada. So there's a famous case of Emerge Canada ARK ETF failure. So Emerge Canada was working with Cathie Wood's ARK ETF. They're trying to mimic what ARK ETF buys and sells on a daily basis. And through their Canadian ETF, where they're listed in Canada, it gives Canadians a localized ETF option to invest in ARK's holding, because they mimic ARK's holdings. Now, what happens is the Emerge Canada, or the ETF product, faced regulatory non-compliance issues, resulting in the cease trade order, and eventually winding down of all the ETFs. So the whole operation is shut down. Maybe there's fraud going on. Maybe there is something going on, but it's a very bad situation for the investors, because a lot of investors experienced considerable losses. When the cease trade happened, the ARK ETF was actually going downwards. People have their money stuck in there. They cannot sell, right? Because cease trade means like you cannot trade, you cannot buy or sell your ETF on the market. That lasted for a couple of months, and then Emerge Canada have to liquidate whatever asset they have to try to pay back, to return money to their investors. But at the end of the day, they were not able to return all the money back, or the investors were not able to get all the money back. So as an example, there's a trader or investor in Mississauga, Ontario, who invested in the Emerge Canada's EARK ETF. He put in $10,000. $16,000. He was only able to get back $10,000. And there's other investors who invested $2,000 and was only able to get 30% of the investment back. So it's a catastrophic, very, very bad situation for the investors. So it's very important when it comes to selecting ETFs, right? In this case, the Bitcoin ETFs. The SEC's approval of 11 spot Bitcoin ETFs ranges from very popular providers like BlackRock and Invesco to newer entities like Valkyries and Hashdex. So it's important when it comes to choosing ETFs, to not only look at the fees, but also look at the track record of these ETF providers to avoid failures such as the one caused by the Emerge Canada. And speaking of ETF safety, I also want to mention a different type of ETF, which is the cash ETFs. These ETFs are getting very popular because they produce very high yields. As the central banks are setting very high interest rate to combat the highest inflation in 40 years, these ETFs are supposed to be a safe haven, and their methodology usually involves in the ETFs investing in major banks' cash products such as high interest rate savings account and other short-term cash product. But they are lacking the protective umbrella of institutions such as CDIC for Canada or FDIC for US, exposing investors to underlying credit risks. So for example, if you deposit some money in the Canadian bank account and your bank goes out of business in Canada, and because you're CDIC insured, you can get paid up to $100,000 as a protection. But the cash ETF do not have such protection or insurance. So the retail investors should understand these risks and choose providers appropriately and even deploying strategies to try to mitigate this kind of risks associated with cash ETFs. For example, look for reputable and large providers with a good track record, and maybe buy different products, like divide your money into different portions and buy multiple cash ETFs to mitigate the risks. So as a conclusion to this video, I think, well, it's hard to say if Tom Lee's prediction of Bitcoin going to 150K or 500K can happen. But it's important for retail investors to understand having a certain level of conviction before buying Bitcoin is very important. It helps you to weather the market's volatility in the future, especially for Bitcoin. We know it can dip a lot when it's that part of the cycle. So having conviction is important. And also, the amount of money you invest in should align with your personal financial situation and your personal risk tolerance. And also, when it comes to choosing Bitcoin ETFs, you need to go beyond just comparing the fees. You should also conduct thorough due diligence on the ETF providers and understand the methodologies behind their Bitcoin ETFs.